Welcome back to the Kaspa Silver YouTube channel. Today's video, we're going to be talking about Yonatan's views on the future potential market cap that Kaspa can be. Now, this is in relation to mining security and if the market cap's mining security was equal to 1%. Now, I'm going to give you guys some context so that you guys can understand why this answer was given. So first off, let's cover the basics. If you don't already know, Kaspa is a proof of work. And in proof of work protocols, there are miners that exist. These miners mine new Kaspa coins into the circulation. This is the emission schedule for Kaspa. And as you can see, that it is a very rapid emission schedule. This means that every time a miner mines a block which contains transactions and they secure the network, they get rewarded for their work. This reward is in Kaspa. And you can actually see the emission schedule here, and it's a set schedule that cannot be changed. Every single month, the reward is getting decreased, and then every single year, it's decreased exactly in one half. So currently, we are seeing that we're sitting at 164 Kaspa per block. Every block is currently being emitted at 1 second. Soon, when Kaspa upgrades to Rust, it's going to be emitting a reward every 10 blocks per second. So now that there's going to be 10 blocks per second, this does not mean that the reward is going to increase 10x. Instead, the reward is going to be divided by 10, and then it's going to be given out to the miners who are mining these blocks. Instead of 164 Kaspa per block, if you divide 164 by 10, that means it's going to be 16.4 Kaspa per block. And since there's 10 blocks every second, it's still going to be equivalent to 164 Kaspa per second being emitted. Now, the reason for these emission schedules to exist is because it's only delaying the inevitable. And the inevitable is that eventually the network needs to survive on fees. Now, there are other solutions to trying to solve this, and it could be making a sort of tail emission, and this is making it like every single year the supply is going to increase by 2%. Now, I believe that this wouldn't be a good solution because it would really hurt the whole narrative of Kaspa and the fact that this supply could never be increased. And anyways, if this solution was to be proposed that we introduce some kind of tail emission where the supply increases every year by 2%, this needs to be met with consensus. And I'm pretty sure no miner would want to upgrade their node and mine this kind of Kaspa that is now increasing the supply, because that only hurts all of our holdings in Kaspa as inflation continues basically forever now. Currently, there's a set amount of Kaspa that will ever exist, and that's about 28.5 billion. Once we hit that mark, no new Kaspa is going to be put into circulation. So how in the world are these miners going to get rewarded? Well, this is when fees come into the picture. And the way that fees can be kept low is that one, adoption does come to Kaspa. Two, there's opportunity for Kaspa to allow for thousands of transactions per second. The fact that Kaspa can allow for thousands of transactions per second in the near future will allow fees to remain very low because a lot of people will be able to use the network, and it will allow for fees to stay super low. When you look at things like Bitcoin, Bitcoin does not allow for thousands of transactions per second. It only allows for a couple transactions per second. And this is why Bitcoin's fees are going to skyrocket if a lot of people start using it. So right now, Bitcoin is covered because Bitcoin's emission schedule is a lot slower. It takes 4 years for the reward to have, and it pretty much will always stick around until the year like 2100. But with Kaspa, by the year 2037, the block reward is already going to be practically nothing. And even before that, the block reward gets under zero by the year 2031. So by the year 2031, the block reward is not even going to be 1 Kaspa anymore. So people say that this is a problem with proof of work because how are the miners going to get paid? They are not going to want to secure the network because they're not going to get rewarded. But this is why Kaspa price also does need to increase. And it's kind of like gas. If you have a car You need gas for it to run. So if you have a proof of work protocol, you need the price to increase to continue running. And the price increasing is basically a product of people just adopting Kaspa. So Kaspa does need to get adopted. And it's just like any other cryptocurrency. For it to be successful, it needs to get adopted. So to think that this is a risk is kind of the same risk of thinking, well, what if this project doesn't get adopted? They're equivalent. If it doesn't get adopted, then basically, yeah, it will be a problem if there's not enough people using Kaspa. Now, I don't think this is going to be a problem because there's going to be a lot of things coming for Kaspa, especially when smart contracts come. But nonetheless, Kaspa is going to need to survive on fees in the future, and there's people that like to calculate how this will work in the future and if it's actually sustainable. And we're going to get into what the market cap has to be and what Yonatan thinks it has to be so that the mining security will equal to 1% of the market cap. Before I read the Discord post, I want to give you some terms that you're going to see in the post so that you actually understand what they mean. So you're going to see two terms, and they're going to be CapEx and OPEX. So what this means is there are a variety of costs and expenses which companies have to pay in order to continue running their business. These costs can be one-off or they can be recurring, and it can often be challenging to keep up with all of these expenses. But how are they able to keep track of all of them? One way is to divide them up into different categories, the most common of which are capital expenditures, CapEx, and operating expenses, OPEX. Capital expenditures are major purchases that a company makes which are used over the long term. So a CapEx would be basically a crypto miner buying a mining machine, and then they're going to use it for the long term. And then operating expenses, on the other hand, are the day-to-day expenses that a company incurs to keep its business running. So operating expenses that miners have are things like paying for electricity or maybe buying a new part for their miner to keep it running. So this Discord user brought up a calculation, and then Yonatan actually responds to it and gives his future projections of market cap. If we look at ETH with smart contracts as reference instead, we have around 2 billion yearly transaction fees. So entire $200 billion network would be secured by $150 million worth of CapEx, a bit better. In conclusion, transaction fees are not sufficient to pay for miners/security yet. They are barely enough as in requiring some minimal ROI for stakers in proof of stake right now, where you have close to zero capex because you can just sell your stake later, where in proof of work, your ASICs lose value over time and zero OPEX. This might be different with huge adoption, substantially changing the relation between transaction fees and market cap. Less holders, more active users, but we don't have that adoption yet, and it will take some time to get there if we ever do. So mind you, this post came out in April of this year. So of course the price is a lot higher than it was in April. And Yonatan came and responded to this post over here. And he asked, how do you calculate from $3.17 per block to $7.5 million capex? And then he mentions, I forgot, maybe I took it from hash rate at that time, so not really a good source. But I think you can skip that part. I think we can reduce it to the very last statement and insert more realistic numbers. If we assume 10% of market cap in yearly transaction fees, that be 10x transaction cost for ETH gas, currently in 50x for BTC, 10% profit margin for miners equals 1% of market cap per year. Upfront capex cost supposed to recover after 1 year, so capex equals 1% of market cap. We end up with the entire network being secured by 1% of market cap plus 0.03% of market cap per day. I could see an argument for that being sufficient. Yonatan responds and says, let's focus on security per year rather than per day, as year is more reasonable proxy of capex as you suggested, hence of security. 1% of market cap, I guess we can feel comfortable with $100 million of capex security, and $500 million would seal it. So we need market cap of $10 to $50 billion within 2 years, or a 20 to 100x from today. And then of course he says, not a financial advice, because he's not saying that he thinks Kaspa will go to this price point or market cap. He's just stating the answer to these calculations where 1% of the market cap is securing the network. And Yonatan believes that it's comfortable that at least $100 to $500 million is equivalent to 1% of the market cap securing the network. So that's where he gets that $10 to $50 billion within 2 years, because within 2 years from now, the block reward is going to be very, very small. If we take a look at that, currently it is October, and if we're looking 2 years from now, so that will be in 2025 of October, the block reward will only be sitting at about 41 Kaspa per block. The last post I want to show you guys is a calculation that Liberated Potato made in relation to living on fees for Kaspa. So, here he's making the comparison with Litecoin because Kaspa is essentially similar to Litecoin's purpose and goals, but it is for sure way better in terms of technology. So here he says, assuming worst case, Kaspa at Litecoin's current market cap, 1 Kas equals 20 cents. No rusty Kaspa, no smart contracts. We're still stuck on 1 blocks per second and about 120 transactions per second on average. Zero mining rewards. So this means that after all of these years of Kaspa existing, it only got to 20 cents, and now miners are not even getting paid by Kaspa for mining blocks. They're only getting paid by fees. And he calculates that fees is equal to about 0.01 Kaspa. And then if you do this math here, you'll get that mining fees daily is going to equal about $21,000. And then he even says here, even at worst case scenario, $21,000 is enough to sustain a fairly successful network. And mind you, he's calculating that Kaspa gets like no upgrades at all. No Rust comes in, no smart contracts come in. We're still stuck exactly how we are today. And it literally only goes to 20 cents. And that would basically just be about like 3 billion market cap, 3 to 4 billion market cap only within the next decade. So here he gives a neutral case where let's say Kaspa gets a crazy 100 billion market cap, Rust comes in, Kaspa's at 32 blocks per second. We have smart contracts. We also have Dagnite, and then Kaspa's equivalent to about $3. The transactions per second will be about 1,000. The fees will still be 0.01 Kas. And then if we have 1,000 transactions every single second, some other statistics, and mind you that this was done in March of this year. It says in the last month, Bitcoin miners made $400 to $1 million a day from fees alone. 2020 Nielsen report for credit card transactions, 467.65 billion transactions, and that's equivalent to about 14,830 transactions per second, $25.3 trillion in volume. Credit card companies' revenue was $323 billion in 2020, nearly $1 billion in fees a day on average. So looking at these two calculations, we can assume that possibly Kaspa will be able to survive on fees alone, and the fees won't even be that much. Imagine if Kaspa had fees at 0.01 Kaspa per transaction and it was only at 20 cents. That would still mean that fees are less than a penny. So that would be really, really good. And it will just still show that Kaspa will be very powerful when it comes to using it as a medium of exchange or a smart contract system in the future if fees can remain this low. And I believe they will, because of the fact that Kaspa can scale. We can allow for a lot more transactions per second, and 10 blocks per second is going to be coming very, very soon for Kaspa. We're going to start getting that testing going for it. And then after that, maybe around 6 months or so, we should see it on the main network for Kaspa. So I hope you guys enjoyed this video. Leave a like, subscribe to the channel if you guys are new around here. And as always, don't be average, be different.